But I want to talk about public debt, and I want you to respond to this, Michael. 31.27 trillion, that's slightly above our GDP now. And again, of course, our deficit is about 38 trillion. We're talking about the debt that's held in the hands of the non-governmental balance sheet. This is the highest it's been on a percentage of GDP. It's over 100%. Highest it's been since World War II.
It's so frustrating because this administration came in with an eye on debt and deficit, right? Besson talked about it, how we're going to bend the debt to GDP curve. We had Doge, and they've just whiffed. We're asking for $1.5 trillion more for the military. It's just hard to put how big a number that is in perspective.
The warning signs are everywhere right now, and even some of the biggest names in finance are starting to sound genuinely concerned. During a recent conversation, Anthony Scaramucci and Mike Novogratz discuss a really troubling development that threatens the entire global economy. This is no other than the issue of the world's uncontrollable debt, and at the center of it all is one uncomfortable reality: America's debt problem is spiraling out of control. Public debt has now pushed above GDP levels not seen since the aftermath of World War II. Deficits continue exploding higher, and despite years of promises from both political parties, almost nobody in Washington appears willing to seriously slow the spending. And that's exactly what makes this moment so dangerous for investors. On the surface, markets still look strong. The S&P 500 keeps printing new all-time highs. The Nasdaq keeps climbing. AI optimism continues pushing tech valuations higher and higher. But underneath that optimism, consumer confidence is weakening. Inflation pressures remain unresolved, recession fears continue lurking in the background, and the gap between Wall Street euphoria and Main Street anxiety has become impossible to ignore. Novogratz points directly to that divergence as one of the biggest warning signs in the market today. What makes this even more complicated is the fact that crypto has not escaped any of this pressure. In fact, crypto investors have spent most of this year watching Bitcoin and altcoins repeatedly lose momentum every time it feels like a breakout is finally coming. Even after the massive bipartisan breakthrough surrounding the Senate Banking Committee's approval of the crypto market structure and clarity legislation, Bitcoin still failed to hold critical levels and has now slipped back below $80,000. That tells you something important. This market is no longer reacting purely to crypto headlines. It's reacting to macroeconomics, liquidity fears, government debt concerns, and uncertainty surrounding where the global economy goes next. So in today's video, we're going to break down why some of the biggest macro investors in the world are sounding the alarm, why the disconnect between Wall Street and everyday Americans is becoming impossible to ignore, what this means for Bitcoin and the crypto market moving forward, and why the battle over crypto legislation in Washington could become one of the most important financial stories of the year. If you enjoy these kinds of deep macro and crypto breakdowns, make sure to like the video, subscribe to the channel, turn on post notifications, and let's get into it.
And at the same time, I had a dear friend of mine who has two sons, 82nd Airborne, over in the theater right now. And he said they sent the one, they didn't even have a pistol, and he's got a rifle without a scope. We got shit. We're not really equipping our guys with world-class equipment, yet we're spending $1.5 trillion. The amount of waste, fraud, and abuse, to use the term that Doge had used, that is in the military is just breathtaking. The amount of money that, Palantir and Anduril are making and Raytheon is breathtaking at a time when we're not really doing a great job of giving our troops world-class protection and or even combat equipment. And so as a country, not just in the military, but across, we need to look at government as a service, because that's what government is to serve the people, as a business, and realize, how do we do this better? In New York City, we're spending $44,000 per kid in school. And I'm not saying that's the right amount or the wrong amount. It costs more in a private school, but it's a lot higher than it was per child 8 years ago, because we've got declining enrollment and the results are getting worse. So we're spending more with worse results. The same thing in the military. We've got to figure out how to bring business into government to bring some efficiencies, or we're going to bankrupt ourselves.
I'm super worried, but the markets Mike Novogratz, they don't seem super worried. Okay.
S&P volatility is trading, I think, like a 16 handle. It's to buy some protection. It just is. Like, we're in that acceleration phase of a bubble. You don't know where it goes to. And you don't know if it's a month away or 18 months away. And no one does. Like, the total stock market cap as a percent of GDP is a record high. Those are usually big warning signs. Retail sentiment's at like 98, 99%. Big warning signs. So go take some of your money that you've made, because if you're in the market, you've made a ton, and buy some puts. 1 month puts, 2 month puts, you can pick your date, but they're cheap as heck. And we're just in a really dangerous part of the market. Again, I'm not saying it's going to go down. Like the AI story, I can say it's the most powerful story we've ever seen in our life. And it is unbelievable for bringing bottom line profits. You're going to replace people with agents, you're going to get more profits. And so the stock market might keep going up for a long time. I don't know. It feels very, very frothy. And so, don't kill yourself. Don't get yourself out of your longs. Just buy puts.
Ray Dalio is saying to people, this is a historic opportunity. He's banging the drum, wake up. You have AI-driven productivity that could generate enough income growth to actually ease the debt burden. And it is a plausible scenario where we could grow our way out of our debt debacle. It would require, though, reducing deficits to 3% of GDP through a mix of tax increases and spending cuts. Is that something that the Congress would actually take up, you think, or we're just going to be?
In some ways, we had our best shot, right? We had the Republicans who said they were going to do it, and you had a really, the dream team of Besson and now Warsh. That was the 3-3-3, and Donald Trump likes to spend money, like period, end of story. And while he said we were not going to get in wars, got us in wars, and wars cost a lot of money. We have literally depleted our entire. Not our entire, but a huge chunk of our arsenal. Well, guess what? I don't care if you're a Democrat, Republican, or an independent, you're not voting not to replace that. Yes. And so we've already baked in a lot more spending coming just to replace all these missiles that we're shooting down missiles with. And so I'm skeptical that the government can tighten it. I mean, you look at Mondami, who's doing the victory lap for having, quote, balanced the budget. Right? He didn't balance the budget by really cutting any spending. He got an extra $3 billion from Hochul. He shifted some monies around. He did what he said he was going to do. He wanted to increase spending because he had a lot of social programs he cared about. And so those programs are getting funded. Some money's, he literally canceled the fireworks on the East River because there were going to be too many. When you do the fireworks on the East River across from the UN, that you have to close the whole FDR. Tons of people can watch, but the amount of overtime you got to pay the cops is real money. So he's looking to save money here and there, but broadly hasn't changed the budget deficit at all. He's just postponed it, right? We're still running a structural deficit in New York City. Politicians don't like to cut spending. Republicans or Democrats.
Buy $10,000 of Bitcoin on a regular exchange. It grows to $60,000. That $50,000 profit, you could owe $10,000 or more in capital gains tax. Now do the same trade inside a Roth IRA with iTrustCapital. That growth, tax-free. You keep the full $50,000, same crypto, completely different outcome. iTrustCapital lets you hold crypto in a self-directed IRA, trade 24/7, and secure your assets with institutional-grade custody. You can also hold gold, silver, and stake certain assets. Real U.S. customer support. $100 bonus when you fund through the link below. In crypto, structure beats timing, every time. There is a lot of controversy surrounding Mayor Mamdani's claims about balancing the budget. Many critics believe this is another example of financial reality being pushed further down the road instead of actually being solved. Supporters may celebrate temporary fixes and accounting adjustments, but the underlying structural deficits remain. Spending keeps increasing, costs keep rising, and politicians on both sides continue avoiding the kind of painful decisions that would actually reduce long-term debt burdens. In Novogratz's view, this is becoming a nationwide pattern: more spending, lower efficiency, and fewer serious attempts to control deficits before they become unmanageable. And while all of this is happening, The crypto market is going through its own identity crisis. Bitcoin and digital assets are no longer the only exciting trade on Wall Street. AI, data centers, energy, defense, and infrastructure have all captured enormous investor attention over the past year, pulling liquidity and speculation away from crypto markets. But at the exact same time, institutional interest in crypto infrastructure and stablecoins continues growing rapidly behind the scenes. That's why the debate around the Clarity Act and crypto market structure legislation has become so intense in Washington. According to Novogratz, banking lobbyists are fighting aggressively against parts of the legislation, especially surrounding stablecoin yields, because of how disruptive crypto could become to traditional finance. And that battle is revealing just how much influence major financial institutions still wield over the political process.
Crypto is less sexy than it was last year. And there are other sexy stories out there. There's data centers, there's AI, there was oil at one point, right? Copper. And the attention of crypto investors, who are just investors after all, has shifted. The attention of institutional players has shifted towards crypto right at the time when the attention of a lot of crypto retail has shifted to other things, if it's sports betting. And so I think we got to be careful of bucketing what a crypto investor is. I think of this convergence that people are going to be investors, and you're going to use crypto rails for something, and you're going to have crypto tokens for something, and you're going to put Bitcoin in that bucket with gold. So you're like, okay, what are my inflation hedges? What are my store of values? Silver, gold, palladium, Bitcoin, right? I think crypto investors have been disappointed this year, period. It's lackluster. You would have been so much better off having sold at 100 and bought the Qs. And I wish I could wave a magic wand and have that tape reverse. And so every one of my crypto friends would have done that. I don't think crypto is going away. I think there's more momentum into the space. I think agentic trading will happen over crypto rails. And that's going to be a big boom for a lot of the infrastructure of this place being the crypto community. But that doesn't mean, Polkadot or Aave or the tokens are going to go straight up. They have communities. Those communities are less enthusiastic. You've got to rebuild a reason to get people to put their eyeballs on what you're doing. I've said this before that, I was down in DC a lot in the last few months, and yesterday was a day I literally spent half the day on the phone with senators. One of the big debates in this market structure bill was stablecoin yield versus no yield. Yield, the bankers say, oh God, we'll have deposit flight, but it's really good for individuals, right? Why shouldn't, mom and pop benefit from the 4%, free rate of treasuries or wherever it's going to go to. And stablecoins is a beautiful way to bring it to the less advantaged. So it's really a progressive thing. The two biggest donors to politics in the last cycle were the banks and crypto. And so the senators didn't want to make a decision. They kept saying, you guys sort it out. It's like the Hatfields and McCoys sort out. They're not going to sort it out. And I kept saying, guys, it's your job as adults, as elected to make the right decision. And it's just not the way politics works right now. The money is too important to these people, to politicians. And so they literally keep trying to split the baby, right? Today's a big day I'm not sure when this podcast is going to, but mark it Thursday, May 14th, a big day, because you're going to have the debate on in committee. Does the market structure bill go forward? Anthony, yesterday it really felt like there was going to be a bipartisan markup of the bill, which would have been assured its passing. Between the cops it's police week down in DC. And so the cops pushing on, we don't like this crypto bill. I don't think they quite frankly understand it because it's giving them more authority, not less. But Cortez Mastro, the ex-prosecutor senator from the gambling state of Nevada, right? She is very smart, and that's her part that she's negotiating. So she's feeling the heat between ethics with the president and all these issues between the bankers. Everyone gets cold feet. And so what I think you're going to see is the bill get through committee, which is good, but only on a partisan vote. And now we're going to have the next 3 weeks, 4 weeks to try to first pray that John Thune puts it to the floor for a vote, because he might not. And he's only going to put it to the floor if he knows it's going to pass. And then have these Democratic senators who have worked their tails off for 18 months. They've been literally inundated in shit they never cared about. Like, because this is nuance at this point. What I keep saying, if I took either side of the bill and held them up and made you spin around 3 times, Anthony Scaramucci, who's a crypto guy, wouldn't know the difference, let alone a senator. That's how close they are on these issues. But it's, well, how am I going to be perceived? I'm going to be sort of soft on crime. The left is going to kill me because we're letting Trump get rich, right? So on both sides, and if this doesn't get done after all this work and how good it is for America, how important it is for America, I will be so dismayed that anything can get done. Like, are we at a point in our history where the system just broke? And this is a really good litmus test for it, because this should be bipartisan. Everyone agrees in that room it should be bipartisan. Everyone agrees that it should get done. And it's just the politics.
Warsh bullish on Bitcoin?
He is. He's a believer in it. Again, his bias is, Warsh's bias, and this is not inside information, this is public, is he thinks AI is going to be the great productivity dividend, and that makes inflation come lower over time and allows him to cut rates. And so I think his bias is dovish. He's looking at a reality of, $100 plus oil, the impact it's having on the supply chain, on PPI and everything else, plus you're getting inflation out of the infrastructure build. And so those two things is probably going to make him say, you know what? Waiting. And then when we need $60 oil for everyone to say, oh, that was just an egg going through the snake's belly.
This isn't just a conversation about whether Bitcoin goes higher next month or whether stocks are overvalued today. It's really a conversation about trust in the financial system itself. Rising debt levels, constant deficit spending, inflation concerns, political gridlock, and growing instability are all slowly reshaping how investors think about money, savings, and long-term value preservation. And in that environment, assets like Bitcoin naturally become part of the conversation whether governments want that or not. What's especially important is that even amid all this uncertainty, none of these major investors are arguing that crypto is finished. In fact, the opposite is true. Novogratz repeatedly makes the point that crypto infrastructure continues expanding, institutional participation continues growing, and stablecoins are becoming increasingly important in global finance. The short-term price action may look disappointing right now, especially compared to AI stocks and other booming sectors, but the long-term thesis surrounding digital assets hasn't disappeared. If anything, the macro instability discussed throughout this interview may ultimately strengthen the case for decentralized financial systems over time. At the same time, the political battle now unfolding in Washington could become a defining moment for the industry. The fact that crypto legislation even advanced through committee with bipartisan support is already significant considering how divided the political environment has become. But as Novogratz explains, the real challenge comes next. Lobbying pressure, election politics, banking interests, and public perception are all colliding at once. Whether lawmakers can actually push meaningful legislation across the finish line may determine how quickly the United States embraces the next phase of digital finance innovation. And maybe that's the most important takeaway from this entire conversation. Despite all the fear, despite the volatility, despite the debt crisis and uncertainty hanging over global markets, there is still a path forward. Technological innovation continues accelerating. AI could dramatically improve productivity over the next decade. Crypto rails continue integrating deeper into financial infrastructure, and Bitcoin continues surviving every major macro crisis thrown at it. The road ahead may be volatile and uncomfortable, but periods of maximum uncertainty are often where the biggest long-term opportunities begin to emerge. If you enjoyed this breakdown, make sure to like the video, subscribe to the channel, share this video with someone following the crypto market. Thanks for watching, and we'll see you in the next one.